things that I would like to talk about today would be hi, my name is Alexis and I'm covering the fundamental updates for this week. So before we go into charts, I kind of like to cover a couple of things that I would want to look at in terms of some of the data that's been coming out. So let me share my screen and we will get started. Okay, so first up, I'd like to talk about the Japanese yen. We might not be trading the Japanese yen, but it's good to know, to kind of get prepared on what might potentially happen in the months to come. So what has happened during the Japanese yen is, there are talks currently of the Japanese yen, having intervention coming in. So a lot of ways, right? Let me just, there is an article that came out just a couple of days ago over here on Financial Times. All right, that talks about the Japanese yen. And Japanese yen traditionally, they do have a little bit of intervention coming in when the price hits an uncomfortable level for them. So just taking a look at where the Japanese yen right now, it's just almost at the 152 level, and then now it's hanging just below that. Now I'm going to be using a Yahoo stock chart just to be able to see the data from as far back as I can go. So if we look as far back all the way to the 1990s, the highest it once got to was 146 in the 1990s. And in the last 3 years itself, it hit a 150 in 2022. It hit a 150 again in October 2023. And of course, now within such a short time, it's going back up to above the 150 level. Now over here, somewhere in October, when the dollar yen got to an uncomfortable level of a very low, a very weak Japanese yen, there was a government intervention. The Japanese government came in and bought up a whole bunch of yen, which caused that V-shape dip during this period. And of course, again, over here, when it hit 150, there was speculation that the government will be kind of doing an intervention, and then it spiked downwards again. So where the Japanese yen is right now, and I think over at this period, the recent dip was because the Japanese yen actually did. This was almost about a couple of weeks back. There was speculation in the markets that the Japanese yen will be kind of increasing its interest rates, and it actually did. About 2 weeks back, right? Almost middle of last week, I think it kind of did increase the Japanese yen. And then, of course, markets swung downwards, but then recovered back up over here again. This indicated that while there were talks about a weaker or a stronger Japanese yen, it isn't quite ready to go yet. So what we are waiting for is we are going to be waiting for the Japanese yen to get stronger. But if we look at the seasonality of the Japanese yen, now the reason why we want to look at the seasonality of the Japanese yen is because before we actually start to buy the yen or go long the yen, we want to know which season does Japan normally intervene. Now the last couple of times, the Japanese government, there are a few ways the government can intervene. One, by releasing news report, in the form of rumors or talks that they might do this, they might do that. But then the other way that is a little bit more concrete is they actually come into the market and they start to buy up the yen. All right. So what's happening is if you look at the seasonality charts, let me just pull up a seasonality of the Japanese yen for you guys over here. Now, if you look at the seasonality chart, traditionally between the early part of the year, between March to June, there is a high probability of the Japanese yen being at its almost weakest level, and the yen actually starts to strengthen around the September-October period. And this is why if you look back historically at past Japanese interventions, it usually happens towards the later part of the year, where it is probably a little bit more favorable for the Japanese government to intervene when the Japanese yen has seasonality behind their backs. All right. So whilst I think there is a good potential of the Japanese yen being bullish, it is all about the timing. If we enter in too prematurely, it does kind of erode your future profits if you're going to be set in a very range-bound position. So the data in Japan still remains weak, but the main driver is still risk appetite and sentiment. So we want to see what the traders out there, what the industry traders, the commercial traders out there are doing on the yen side. And the Japanese yen now is considered cheap, right? So if you are in the business of needing those Japanese yen, those commercials who actually need Japanese yen, now is one of the best times to start hoarding Japanese yen if there's a future expectation of the yen getting a little bit stronger or getting a little bit more expensive for import-export trade. So I do have a bias for a bullish Japanese yen, but the question is finding that technical setup to actually enter in. All right. So in terms of monetary policy, the Japanese government has released a couple of little news here and there about how they will intervene, that they are worried about the rates, and they have already increased the interest rate one time. All right. So one of the currency pairs that I am looking at is the yen. The yen pairs is what I will be observing for the next couple of weeks. Now, one of the ways that I trade fundamentals is to pair the weakest versus the strongest in terms of economy. It is a bit challenging because it doesn't happen instantly. You are not going to see the markets change within a week or two. Usually it happens over a couple of weeks, over a couple of months, and that is what we are banking on. So one example for those of you who are a little bit newer to this site is the Kiwi dollar. Now, I have been short the Kiwi and long the dollar for the past couple of weeks. For those of you who follow my Sunday night analysis, you will hopefully have an eye on taking this towards the downside. So a little bit of update on the Kiwi dollar is that I'm not sure if I want to continue shorting the Kiwi dollar for too long. All right, for me, short term, which means maybe in the next 1 or 2 weeks, we still could possibly get a little bit more out of the Kiwi dollar. But over a larger period of time, I'm a bit hesitant because seasonally, the dollar should seasonally start to weaken around now. So I don't really want to trade. I think the Kiwi dollar high chance will start to go in a little bit of a range bound in the next couple of weeks. All right, maybe not immediately, but a little bit. I do give it at least probably, I'm looking at the next support level over here. It does look like it has got a little bit of ways down to go. It's just broken a level over here. I'm looking for a break and retest and maybe just a little bit more towards the downside, but there's not much room to go. All right, so Kiwi dollar still a little bit short in terms of taking in the probably last leg of the Kiwi weakness and the dollar strength. But due to the seasonality changes, I do think the dollar will be waning off for a little bit because of a seasonal bias. So for that, just flash you guys the seasonal charts for that so that you guys can kind of see where the seasonal chart is going. All right, so here we have the dollar index. So the dollar index, you can see over here, if we are looking at the end of, now we are at the end of March, last day of March today. All right, and then on into April, April into May, seasonally over the last 20 over years, there is a tendency for the dollar to pull back a little bit more or pull back a little bit deeper. So, I'm a bit cautious of being very bullish on the dollar right now, even though, the dollar statistics look still pretty strong. Now, on top of this, we have China that's coming in. Now, what's happening on China? An article came out on the Business Time that talks about the China's PMI data. Now, if you look at a Forex Factory calendar, you can see that China's PMI data, which came out this morning, Sunday, 9:30 a.m., that China's PMI data actually has a marked improvement. So non-manufacturing is 53, up from a 51 forecast or 51 previous, 50.8, up from a 49 previous and a 50 forecast. So PMIs are doing better than expected. So there is an expectation that the Chinese market might start to recover a little bit better. And with that, it will start to help the import-export partners to pull up their statistics as well. So who are the major trading partners of China? One of them is Australia. And I kind of like Lloyd's Australian bullish bias, right? Because if China starts to recover, I do feel it will benefit countries like Australia and New Zealand. But let's focus on Australia right now, because when we look at Australia's figures, we have Australia's unemployment rate that just dropped to 3.7 in February. So it has a marked improvement as well. Moving together, I'm waiting for March results to get confirmed. It should be out somewhere in Forex Factory calendar, but the unemployment results has been improving in Australia, which gives an indication that the economy is on a little bit of a recovery in terms of getting a little bit more of a recovery. Now, there are still weaker retail sales in Australia, but we are looking a little bit forward. Like I said, fundamental is about medium term, okay, slightly medium to long term. I do see a good potential of Australian dollars starting to strengthen in the next couple of weeks. So Aussie dollar, bullish Aussie dollar is something that I would like to keep an eye out in light of their stronger employment figures. But just one eye on their consumption, the consumption and retail sales data or inflation data. So from the monetary policy side, the RBA has dropped its tightening bias for now and says that rates could be lowered if consumption weakens. That is not necessarily a bad thing, because what the Bank of Australia is trying to do is they are trying to increase productivity, increase consumption in Australia as well. So a little bit of looking at where the Australian dollar is. So a couple of currency pairs that I will be looking on is also the euro. Now, the euro has very weak data currently. If we look at the euro data, interest rate is 4.5%, inflation 2.6%. The jobless rate is still pretty high at 6.4%. And if I'm taking the jobless rate into consideration, it hasn't quite moved. It hasn't quite moved all the way. It only moved like a little bit in January down to 6.4. So it doesn't have the best unemployment figures. Inflation is 2.6%. Generally not too bad in terms of inflation figures, but what really is a concern is that its GDP growth has not moved much over the last many readings. So if you look at the GDP growth rate, quarterly GDP growth rate, you can see that ever since the Q3 2023 all the way to now, it's barely above zero. So this is a concern because if the unemployment rate is flat and not quite moving and GDP has consistently continued to drop, there is a little bit of a discrepancy in what's happening over there. Very weak retail sales, only slight improvements in PMI. There's lower inflation, but GDP is also not moving. So there's very weak economic statistics coming out from there. All right. And again, I would always like to compare it and look at where also is the seasonal data. If you look at the euro, April into May, there is a slight tendency for the euro to strengthen, but I would read this as a little bit more flat. All right, it's a little bit more flat. You can see it's not super bullish. It's a bit more flat. It's coming off after a weak couple of seasonal months. So the first quarter of the year looks a little bit weak for the seasonality for the euro. So I do feel that there's a higher probability for euro to be on the weaker side. Now, that being said, what is the currency pair or pairs that I will be looking forward to next week is squeezing it down to a couple. Now, I will kind of stay away from the yen for a while more until there is a little bit of a clearer direction coming from the Bank of Japan. So yen pairs, I do recommend technical trading strategies where you just look for the setup, follow the setup, and take it in or out. Now, if you look for a fundamental bias, I am looking at Euro Aussie. All right. So Euro Aussie is a currency pair that I'm interested to look at. And the reason being is I'm waiting for a breakout. So what we do see right now is we see the Euro Aussie consolidating in this little wedge right now. And what I am hoping for, or what I am looking for this to happen, is a good probability of price to break out below this area. All right. So once price starts to break out from this and gives me a retest, I plan to see whether we can take it to a 1.64 level. So this has been consolidating for many days, almost like 2 to 3 weeks already. And I think in the next week, it's either one more week of consolidation or maybe next week is going to break out. So be a bit patient for those setups and only enter when you see the setup. So I am looking for a short Euro Aussie. If price breaks to the upside, I don't think it will break off very far because of this resistance level over here, a technical level over here that will cause price to go right downwards. So 2 ways to trade it. Number one, if price breaks out from here, be a little bit patient. Let's wait for price to reach the resistance level before we try to take it short. So in a way, this is like shopping for a cheaper price or a better price, all right? If price breaks below over here, then I'm going to wait for the retest and take it down to the next level at 1.64. So Euro Aussie is a currency pair I'll definitely want to keep an eye on. Now, I'm also looking for Aussie. Aussie Yen actually is a currency pair that I am looking at, but again, this one takes a little bit of patience. Aussie Yen has come off a little bit already. I want to see that my apologies, not Aussie Yen. I think it's Kiwi Yen. Okay, Kiwi Yen, sorry, because Manu's stronger is Kiwi Yen. I would get okay, here you go. Kiwi Yen, all right, has given us the break below this level. All right, so Kiwi Yen giving us the break below this level. What I want to see is to see whether or not this pullback candle holds, or will we be able to take it below. So if we go and look at it on a 4-hour time frame, then I do think it is a good probability of price hitting a little bit more towards the downside. Again, be careful of those range bound movements, as price does tend to it looks like it's hesitating over here, but the moment it breaks out from this level, I would like to take it down to the next level. Hopefully it could reach at least a 89.5 area. All right, 89.5 area is my first level of profit, or 90 is my first level of TP, and then 89.5 will be my next support level. So these two currency pairs I'll be looking at. So currency pairs I'll be looking at next week is Kiwi Yen, short the Kiwi Yen, and potential short on the Euro Aussie. All right, so two currency pairs I'll be looking for next week based on a fundamental bias, or for the next few weeks actually, unless the governments come up and say something different. That's all I have for this week. Hope you guys enjoyed. And thank you, Lloyd, and thank you, Sam, for hosting us. And I'll see you guys when I see you guys. Cheers, everyone. Have a good Sunday.